Good afternoon, everyone. My name is Alex Radford. I'm a solicitor and abogado with My Lawyer in Spain. Today, we're going to be talking about mortgages, and I'm very pleased to welcome back my former colleague, Nadja Wupperman. Hello, Nadja. How are you?
Fine, yourself? It's nice to see you.
It's good to see you too. So, Nadja, tell us about yourself and a little bit about UCI, because today we're talking about mortgages. And I just want people to understand a bit more about the kind of type of products that are out there. And then just for also listeners to be aware that, we are a law firm. We don't act for clients applying for mortgages. We would always recommend that they speak to a mortgage broker so they can get the best deals. And lots of mortgage brokers would talk to you about the products that you have available for clients. Okay. So just tell us about yourself and about the bank.
So thank you for having me, Alex. As said, my name is Nadja Wupperman. I am the International Buyers Manager of the UCI at the Costa del Sol. UCI is a financial institution that works in whole Spain. It is regulated by the Bank of Spain. And as said, I am the manager of the International Buyers Branch, which we cover from Manilva to Torremolinos, but obviously, we have operations in all the area of the peninsula and the islands. As a branch manager, I coordinate a group of financial consultants which help clients to buy their dream property in Spain. Okay,
excellent. So, and a quick question for you, probably an easy one. Do you work with mortgage brokers?
Yes, of course. Our main collaborators are the real estate agents, of course, and the mortgage brokers. Both of them are the origin of the client. The client comes to the mortgage broker basically first hand and second hand with the real estate agent.
Because most mortgage, well, actually by law now, Nadja, all mortgage brokers have to be are regulated and registered with the Bank of Spain. Is that right?
That is right. All bank employees and all mortgage brokers have to be registered with the Bank of Spain. They have to pass an exam, and this exam has to be renewed every year. So every year they have to renew this exam, myself as well, and they have to be registered at the Bank of Spain. And even this register is public. So every client, myself or any person, could go into the website of the Bank of Spain and see if the mortgage broker they are dealing with has this certification.
Oh, that's fantastic. That's good. That's good to see that. Okay. And what nationality are most of your clients?
We work with many nationalities. Obviously, European region, Scandinavian, UK, Switzerland, but there are many other nationalities which are coming into the picture at the moment, which are Polish people, Czechs. There are coming many different nationalities. We work with people working abroad in Singapore, in Australia, in Canada, but obviously the main nationality are UK citizenships and Europeans and Scandinavians. But as said, Polish and Czechs, they are coming big, and even people from Belgium, Netherlands. We work with many nationalities.
Okay, that's interesting. Yeah. And when it comes to Spanish mortgages, I think each country has a kind of different market when it comes to mortgages. So, for example, in the UK, most mortgages tend to be for short periods of time, and it's interest only, and then people will probably take out another product to help pay their loan off. Whereas in Spain, it tends to be capital and interest. When you're dealing with these clients, what do you kind of find are the main differences that they encounter with Spanish mortgages compared to their home countries?
Yes, you're right. Some clients are used to mortgage with interest only. That happens with the UK clients and Scandinavians mostly. For example, the French and Germans are more similar to the Spanish ones. In Spain, the mortgage usually has to be a minimum of time frame from 7 years. 5 to 7 years is the minimum that it has to be set the mortgage for, and maximum 30 years. It depends on each policy of each bank. for UCI, it's 7 years minimum and 30 years maximum, and you pay from the first day on, you repay your mortgage, interest and capital. The only difference is that at the beginning of the mortgage, you pay more interest than capital, and when the time goes by, then you pay each quote more capital than interest.
Okay. So you pay more interest up front, and then as time goes by, the interest reduces and the capital goes up.
Exactly, that's right.
Yeah. Okay, and so you mentioned there that basically minimum term of 7 years, and just to give us an idea of ages, how young or old can I be to take out a mortgage?
Young, 18 years old. Old, we give mortgages. I'm going to speak for UCI. We give mortgages for clients up to 75 years. That means the mortgage has to end with 75 years. And if the mortgage has to be a minimum of 7 years, then 68 would be the maximum age you could take out a mortgage with us. Okay. And young, well, the 30 years period you have for the mortgage.
So the term of the mortgage is a maximum of 30 years?
That's right.
Okay, excellent. That's interesting. And so there's still hope for me yet. So I've got to pay my mortgage off at the age of 75. So,
yes, and it's good to know also that these time frames apply for residents and non-residents. We don't make a difference there.
Okay, that's excellent. So, Nadja, what are UCI's most popular products?
Well, the good thing about UCI, and it's not because I work here, it's because it's really something very interesting, is that we are a financial institution that specializes in lending mortgages. We only do mortgages. That means that we have a bigger range of products than a regular bank, which works with many other also funds, deposits, mortgages, and what does it mean? We have mortgages obviously for buying your first home, your second residence home, holiday home. If you're a resident, an investment home, this is for residents only. We finance purchase plus refurbishment in one mortgage, which is very important to know that the refurbishment is not an extra loan with a higher interest rate. No, it is included in the mortgage with mortgage interest rate, which is much lower than a normal loan. We finance building your own property. For example, you have a plot and you want to build a property. We finance this construction upon certification. If you have, for example, a big property, you want to make a big refurbishment as well. Maybe the property is already yours and you want to make a big refurbishment. We do this upon lending you a mortgage, or even clients who bought in cash in the past 6 months, and maybe now they regret it because anything can happen in your life, and you maybe think, oh, I should have taken out a mortgage. We can give you a cash back. There are many solutions for our clients, residents and non-residents.
Oh, good. That sounds good. And Nadja, one of the things you know from working with us, we're very busy acting for clients buying and selling property all over the country. But when it comes to our buyers and they're looking for a property and they want a mortgage, and I'd say now is probably a good time to buy a mortgage, certainly say for UK potential buyers, because the exchange rate is down. So a few months ago it was at 119, 120 euros to a pound, and now it's down to the 115, 114 mark. So it's always good sometimes to take out a mortgage to hedge that exchange rate, but obviously talk to your financial advisor and mortgage broker first. But we've always said to our clients, before you go out and offer on a property, speak to an independent mortgage broker and find out how much you can borrow. Yeah.
Yes, that is totally the best advice you can give your clients. And we tell our clients, also the same. When we sometimes have a client who does not know yet if they are, which house they are buying, we insist always, let's check your finances, let's see how much we can give you, and with the decision you can go house shopping. It's much easier this way, because otherwise you might be at the risk that you find a property, you like the property, and maybe you don't get the finance for that property. And it's always easier to have the knowing that you have a mortgage already approved by the bank with a firm decision, and then go house shopping. It's for me always the first advice to give our clients. It's something we do, and it's not to shame other banks. Maybe some others do it, but I know we specifically do it for non-residents. It's the pre-approvals. Give the client a pre-approval, and with that, they have this peace of mind to look for the property.
Absolutely. So, for the pre-approval, what kind of documents would you need to give them that comfort before they come out and offer on properties, Nadja?
Yeah. So first of all, just to say, we work digitally. That means, as for example, if the client gives a power of attorney to you, maybe they give the power of attorney to you here in Spain, or they do it through the consulate or another notary. If they want, they can come to see us at the office, or they can do everything. Sorry, they can do it everything digitally. Once, what we do is we send them a digital application form. They sign it for data protection, which is very important, and ask them for the documents. The documents to start the process are very easy. It depends on if you are, for example, an employee or self-employed. The basic information we need, for example, for an employee would be the last 3 payslips, the working contract, and the last tax declaration, and as well the bank statements to see the income and outcome of everything, what they state in the application form. If it's someone who owns a company or is self-employed, we ask for the last 3 tax declaration and the last three certified bank accounts from the bank, from the accountant. Sorry, from the accountant.
Okay. No, yeah, that's standard financial information that people would expect to have. And once you've got that information, how long will it take you to be able to confirm how much they could borrow?
Once we receive this information, we check if there is anything which might be missing, because every client is different. We might have clients which, additionally to all they have stated, might have a portfolio of properties or any other thing. If there is something we see that is missing, we ask straight away. Once we have all the documentation, we send it to our risk department. The risk department revises the documentation. Depending on the profile, we can have an answer between 48 hours and 2 weeks. I'm going to give you this time frame because it's not the same simple operation from a person who works, for example, for a school, as someone, a businessman who has a holding of 20 companies. But approximately, this is the time frame you might expect. Okay,
so depending on how complex your finances are, the longer it's going to take to get that. Yeah.
Yeah.
Okay. Yeah, that's understandable. Yeah. Okay, and let's talk about percentages now. So how much can we borrow of the valuation?
We work upon purchase price, which means that if there is a little bit of fluctuation between the purchase price and the valuation, sometimes we might maintain the percentage over purchase price. For example, we give for non-residents 70%, up to 70% from the purchase price. Let's say for some reason the valuation has dropped a little bit, less than 10%. We still could maintain the 70%. We wouldn't go 70% up from the valuation. So that is something which is in benefit of the client. If the client is a non-resident, I said up to 70%, depending on the profile. If the client is resident or digital nomad, which you might know, resident in another country, but actually living in Spain, yes, we can go a little bit up, maybe 80%. And if it's civil servant, maybe 90%, but that would be for resident civil servants in Spain. We would move something between 70 and 80% for non-resident or digital nomads.
Okay, so to 70 to 80% for non-residents.
Yes, also it depends on the profile of the client. Sometimes it has to be adjusted depending on their economy, but these are the rates we can go up to.
Well, that's fantastic. Yeah, and what are the typical interest rates at the moment, Nadja? So, how, someone who wanted to borrow 70% on a 20-year mortgage, what kind of interest rate are you looking at? And bear in mind, we're in 2022.
Well, I have to be honest, we have just tomorrow a meeting with a revision of the interest rates. So you know how the interest rates are going up, the Euribor is going up, and this is going to reflect on the interest rates we are going to offer. But approximately, if it's, for example, a variable mortgage, we always start with a fixed interest rate around 3% the first year, and then Euribor plus 1.50. But I'm speaking approximately because the interest rates are going to be revised because we have to adapt them to the new Euribor. But what is important is that we offer variable interest rate, mixed interest rate, and fixed interest rate. That is something which might not be so important, but for some client it is, because depending on the nationality, for example, Germans, they prefer always a fixed interest rate, and some other nationalities also, or because of the profile of the client, because they know the economy a little bit better, they prefer a variable one. So we always give them the options, and I know some other banks, they only stick to one, which is variable, and it's good for us to have the peace of mind that we can give the client a few options to choose from.
So you've got fixed and variable, and then you said a mixed. What was the mix?
Mixed is that the first years of the mortgage, we have a fixed interest rate. For example, the first 5 years of the mortgage, the client has a fixed interest rate, and then it's variable. This seems not so important, but it could be important, because let's say a client has a few other debts in their country and is taking out a new debt here in Spain. Usually we work with an income debt ratio of 40%, which means your debt should not be higher than 40% of your income. If the Euribor is going to go up and you ask for a mortgage to us and your rate is 39.8%, and you want to contract a variable interest rate, if the interest go up, your ratio will go up, which is not good for you nor for us. So giving a client a fixed or a mixed rate, which has a part of a fixed rate for a term, is giving the client a peace of mind that they know that in this term they will always have the same quote. And when these economical storm we have right now with the Euribor maybe in 5-year passes, then they start paying the variable one, which is lower and might be a bit more interesting for them, knowing that the Euribor is not going up, down.
Sure. So basically, someone's sent you all the documents through, or sent their independent mortgage broker all these documents through. They've got they've got an in principle offer. They found a property. You're ready to go, and we'd always recommend to our clients that because of the nature of the Spanish conveyancing process, we recommend that they sign a power of attorney in favor of a specialist conveyancing lawyer, so that lawyer can apply for their NIE numbers, which are Spanish tax numbers, open bank accounts, sign mortgage documents, complete the purchase, register the property in their names, pay taxes on that, and also then kind of connect water, electricity, so the utilities, set up utility direct debits to their bank account. So their power of attorney is a really useful document. help with that. But assuming we've got all that in place, Nadia, they found a property. So from the moment they say to you, Nadia, we've got the property, we want the mortgage, off we go. And they say to me, Alex, we've got our mortgage, off you go. How long, what's the quickest the bank can do it in?
So we're speaking once the mortgage is already approved, the NIE number is in place, or everything is in place.
Yeah.
Well, if everything is in place, the only thing what is left is sign the binding offer. And per law, it's 10 days what you have to count until you can go to completion. So if everything is in place, we prepare the binding offer, which is done in 1 day.
Yeah.
The client signs the binding offer as well digitally. As I said, with us is everything digital. They receive an email, they sign with a PIN code, and we upload digital the documents to the notary, and the client has to only decide when it's best for them to sign after 10 days.
Okay. So that's once the binding offer's been issued, we've got to wait for 10 days. And from if they say to you, look, the 1st of July, I found a property, can you arrange the valuation? So the valuer goes out. Let's just say he goes out. What does he take? 2-3 days to go out? Well,
we were speaking in the previous case. Everything is already in place. If we're talking that the client still does not have a valuation, obviously we have to evaluate the property first. The valuation of the property, it's in 2 or 3 days maximum. I don't think it should be taking any longer unless there is something with the showing of the property of the owners, but usually it's done very quickly.
Okay.
Once the valuation is in and everything is in place, then we will release the binding offer and count 10 days from then. Definitely, valuation is.
And typically, Nadia, between the valuation and the issuing of the binding offer, how long does that take?
That depends if there is anything missing or not. I mean, missing in terms of documentation. If the client has provided all the documentation and the only thing what was missing was the valuation. Once we receive the valuation gets checked by our internal department and count a couple of days, and then the 10 days as per law which is the, how do you call it, the reflection days, which the client has to...
The right to withdraw. They've got 10 days to withdraw from the mortgage. Okay.
Exactly.
Okay. So basically, though, finding the property, so long as you've got all your ducks in a row, you've got the power of attorney, you've got your lawyer, you've got your NIs, you've been pre-approved. You then basically find the property, get that valued. We could complete in as little as 4 to 6 weeks if everything goes our way.
That's right. That's right. If everything goes smoothly, that's right. There are always parts which we cannot control. If there is an inheritance or if there are meters, the property that are not registered, that takes extra time. But if everything is in place, 4 to 6 weeks would be a reasonable time frame.
Okay. Now, basically, because things can go wrong and we need what we would call a little bit elbow room, just flexibility. When people are applying for mortgages, I'd always recommend that completion is probably up to 12 weeks from later. So obviously we'd say completion within 3 months or earlier by agreement. So we can bring that forward if we wanted to. Okay. And just so people are aware, so in Spain, so when I started practicing as a lawyer in the UK, a mortgage deed is a 1-page document, and the client would sign it, I would sign it, and then 2 witnesses sign it as a deed, and then I would send it to the land registry and register it. Here, the banks love their paperwork, and you've got to sign it. And, well, basically, you guys do it digitally, but there's a lot of paperwork to be signed, and what happens is we would go along to the notary to complete the purchase. The bank would come along as well, or the bank's lawyers come along. They would bring a check for basically the mortgage made out to the other side, or to cancel the other side's mortgage if they've got a mortgage or any debts. And basically, they bring that check along. The buyer brings the balance of the monies, because they, let's just say, in the case of borrowing 70%, they need an extra 30% on top. So they bring the, we'd have all the monies at the notary, pay the buyer, the sellers, and then the bank collects both deeds, the deed of purchase and the deed of mortgage. They pay the taxes, and depending on the region you're in, it's very important to check to see how much those taxes could be. So purchase tax in Andalusia is 7%. You go up to Murcia, it's 8% transfer tax. Over to the Costa Blanca area, the Valencian region, it's 10%. Catalonia is 10%. Jumping over to the islands, Mallorca, it starts at 8%. When you come back to the Canaries, it's 6.5% for a second-hand property. So it's very important to do your budgeting when you're buying a property, but just bear in mind, as soon as you go to completion, you complete the purchase, the property is yours from that date, even though if you've got a mortgage, the bank will then register the property in your name, and that could take 2 to 3 weeks. Okay, so I've got my mortgage and my property, Nadja, and you know, I might have my mortgage with another Spanish bank, and I've seen your fantastic rates of interest, and I like the mixed products you talked about. Can I change from my existing Spanish lender to UCI?
Well, legally you can. It is upon policy of each bank if they want to do it or not. It's the same as different mortgage products, if they exist or not. I said, for example, some banks only offer variable interest rates and they don't offer mixed or fixed because it's their policy. Some banks might accept taking over other mortgages, and some banks not. And sometimes it also depends on the profile and the reason behind the change. But it's not something that it is impossible. It has to be studied case by case. It's in summary, it's not like the principal product which is now being offered on the market by all the banks, but it's an existing product.
Okay, so again, you know, typically in the UK, for example, my experience with you know, the mortgage product there lasts for 2 to 5 years, and then you would change lenders. Yes. And here, again, what you're saying is that doesn't really happen much. Once you've got the lender, you tend to stay with them. Yeah.
Usually, you tend to stay for the whole term. As you know, by law, you have the possibility to make cancellations without any charge. It depends if you choose a fixed interest rate mortgage or a variable one. Now, the law puts a maximum on how much the bank can charge you and how much you can pay cancel in anticipation for free. So, for example, you can cancel 25% each year for free without any charge. That is something good to know, because if you want, for example, to cancel the mortgage with your bank for any reason, this is the easiest way if you don't want to wait to pass the time, the 5 years that the law establishes. But the other way would be also ask another bank if they want to take your mortgage. It's upon application.
Okay, cool. Okay, so we're nearly at the end of our little the webinar, and what we're going to, the last point I just wanted to bear in mind or mention for clients is that when you take out a mortgage, it obviously gets registered at the land registry. So when you come to sell, that mortgage will appear there, and that has to be cancelled at the time of completion. So you would ask for a redemption statement, and your future buyer would come along with the check to pay off the bank. And of course, you know, when you get to 75 and you pay off your mortgage, then the bank would issue you with a certificate confirming all paid, and then you would basically have to collect that certificate, take it to the land registry, and remove the charge at the land registry. So that basically it's free of charges. Even though you've paid it off, here in Spain, you've got to take that next step and remove it from the land registry. Okay.
Yes, that's very important.
Very important to bear in mind. So Nadja, well, basically, we've covered all the questions that we had prepared for you. So I'm very grateful for you kind of joining us on the seminar, which I think has been very useful.
Thank you for inviting me.
My pleasure. Have you got any final comments, any final words of wisdom for people who are looking for mortgages?
Well, I think I've said already. I think we both have think on the same way. I usually recommend before you go house shopping, get a lawyer, put in place a power of attorney, and first of all, apply for the NIE number, because the NIE, you know, it's after the pandemic, it's taken a little bit longer. So if you have these documents in places, then go for the mortgage, and then with this peace of mind, you are happily going for house shopping. That would be my only recommendation. And the other thing is, I said, we have a bigger range of products than other banks, as we only do mortgages, and we are quite flexible with the type of mortgages that we can offer the clients, and sometimes we even do some tailored things. So if the client might have a project in their mind and they don't know if it's something feasible, just ask me. It might be possible. You never know.
Okay, cool. Well, thank you very much indeed for those final words of wisdom, which kind of marry up with exactly what we tell our clients. If you're thinking about buying a property in Spain with a mortgage, speak to an independent mortgage broker, get a mortgage offer in principle, and then go property hunting. Thank you very much indeed, Nadja, for joining us, and we look forward to seeing you soon.
Yes, for sure. Have a nice evening.
You too. You too.